Hello, and thank you to Vinod and Connie for an awesome kickoff to the day. Now it is time to start round 3 of the Startup Battlefield. Before we do, if you think the Startup Battlefield is cool, if you're interested in startups, if you like the companies we've selected, you should definitely check out a new TechCrunch podcast called Build Mode. It's going to be hosted by Isabel Johannesson, who puts the whole Startup Battlefield together. Season 1 is going to drop on November 13th, but you can subscribe in your favorite podcast app now. That said, let's start the battlefield. As a reminder, this is where the next generation of startups takes the stage to compete for $100,000 in equity-free prize money and the Startup Battlefield Cup. 5 companies in this segment will pitch for 6 minutes each, and they'll also be doing live demos, which is, sometimes fun, unpredictable. And then there'll be a panel of top investors who get to grill them for 6 minutes. And then the best startups will be competing on Wednesday in the finals. If you have a favorite company at the end of this, or even during, go to the polling section in the event app and let people know you can vote for them. And yeah, that wraps up all the housekeeping. So let's bring out all of our expert judges. First up, we have Rinki Sethi, who is Chief Security Officer at Upwind Security and founding partner at Lockstep. She previously served as Vice President and Chief Information Security Officer at Twitter, Bill, and Rubrik. Next, we have Miloni Madan Presler, a partner at IVP, where she focuses on partnering with first-time founders building inflection-stage technology companies. She invests in sectors including enterprise software, healthcare, and security. Next, we have Ilya Kirnos, the co-founder, managing partner, and CTO of early-stage venture firm SignalFire. He leads the development of SignalFire's in-house Beacon AI data platform, which tracks more than 660 million employees and 80 million companies to guide the fund's investing by surfacing high-quality founders and fast-growing companies. Next, we have Madison Faulkner, a partner at NEA, investing in early-stage data, infrastructure, developer tools, data science, and AI. And she also leads the data and AI platform internally for improved investment decision-making. And last, but not least, we have John Chu, a partner at Khosla Ventures with a passion for machine learning and its impact on enterprise infrastructure, applications, and developer tools. He also just told me that he actually had a Startup Battlefield company here, a few years ago. But let's give it up for all of our incredible judges. And that means it is finally time to bring out our first Startup Battlefield company. That company is Identify. Presenting for Identify is co-founder and COO Kevin Miyamoto.
Hey, good morning, everyone. My name is Kevin Miyamoto. That's Ramis Malian. We're 2 of the co-founders of Identify. And after spending over 20 years in financial services, we're super excited to share with you how we're fixing the future of work for banks and credit unions. According to a recent survey, banks lose a whopping 30% of total revenue due to inefficiencies. Let that sink in for a second. 30% of total revenue, poof, gone, just because they're not efficient at work. And when leaders are asked, 80% of them said that it's because of disparate, siloed systems. This is a huge problem. If you're looking at business bankers, they have 3 primary roles: acquire new customers, service existing customers, and grow revenue and deposits. The problem is that bankers are wasting 20 hours a week using tools that were never built for banks. So let's dive in. If you're a business banker and you want to acquire a new customer, you're wasting 5 hours a week going on Google, searching small local businesses, going through their websites, scouring over LinkedIn or the Yellow Pages just to try to find a contact. It's a very manual, labor-intensive, horrible process. You don't want to know what's worse? Servicing existing customers. Rinki, picture this. You're a business banker. You have 10 different windows. You're looking at 10 different systems, 10 different logins. You're pulling PDF reports that look like that from screens that look like this just to try to figure out what your customer has with you. And sure, if you're at a large bank, maybe you have a CRM, but it's not connected to any data. You still have to do this. And if you're at a small financial institution, you have no CRM. Everything is literally just Excel. And then finally, growing revenue and deposits. Once you figure out, do all that research to figure out what your customer has, each banker is responsible for creating their own talking points and then generating their own customer-facing report. All in, it could easily take you 5 to 10 hours per customer meeting just to generate a report. And in fact, it's so labor-intensive that a lot of bankers just wing it. Listen, I think we can all agree, singing 90s boy band music for karaoke, pretty awesome, right? We all love that. But using 90s technology at work, that just sucks. And listen, you might be thinking, wait a minute, there's technology that solves this, and sure there are. Banks can spend millions of dollars stitching together Salesforce and Power BI and Seismic, or they could just use Identify. Identify is a new type of AI workspace that's part CRM, prospecting, agents, workflows, and digital banking integrations in one super easy to use platform. So Ram, let me turn it over to you to do a quick demo.
Hey, thanks, Moto. All right, guys. So in the interest of time, I'm going to jump into demoing how we help acquire a customer. Now, typically, as Moto mentioned, you're going to go into Google, LinkedIn, or other sources to pull a spreadsheet, import it to a CRM, and pray to God that you have the right contact. Within Identify, we give you access to over 750 million contacts. And more than that, we give you access to their tech stack. So if you want to know as a banker, hey, who are they using for payment processing? Is it Stripe? You can pull that up, and within seconds, you can import that opportunity and begin working that relationship. All right? So next, let's look at how we help with servicing a customer. So of course, within our platform, we keep track of timeline, contacts, notes, activities, but we also have AI embedded that gives you access to over 2,800 other systems. One particular use case that our bankers love is our checklist. So today, imagine if you have to perform a payment audit, which every single financial institution has to do. You're asking for information that's coming through inboxes from multiple people. You're keeping track of it, hopefully on a spreadsheet, maybe on a Post-it note, right? And that's a nightmare. With Identify, we give you this nice, easy tool that is like a to-do list for your client and internally. So your client is now engaged digitally in a nice, clean workspace, and they can engage, watch a video, upload documents, acknowledge what they're doing, but more importantly, all of this is synced up within Identify, so now, as an employee or a banker, I can get a full audit trail in real time with a date, time, and author stamp of all activity, okay? And then finally, let's look at how we help with growing revenue and deposits, which, as Moto mentioned, is the last but most important thing. So today, you're going into siloed systems, and it's taking you 5 to 10 hours to pull this all together in a PowerPoint, okay? 5 to 10 hours for a 30-minute meeting. With Identify, we not only normalize that data, but we create beautiful, customizable, client-facing strategic reports that you can deliver hard copy or digitally to your customers. Now let's go back to slides, and I'll turn it over to Moto.
Thanks, Ram. So let me talk about the team here for a little bit. You know, Ram and I came from financial services. We lived this every single day at Wells, and we're building Identify based on our own experiences. We also have Vegan, who heads up our product, and we're so happy to have an amazing board, including Joe Proto, who's on the Google Cloud Advisory Board and sold his last company, Transactus, to MasterCard. And combined, our advisory board has over 500 years of experiences in financial services. Talking about the market for a little bit, while we do have some large customers like SVB and Comerica, our target really is the 8,700 financial institutions under 50 billion in assets. They have all the same challenges of the large banks, but just with a fraction of the resources. And while they might not be household names, they each serve millions upon millions of customers. Speaking of customers, we have over 180 financial institutions with us today. And really what might be more powerful is all the partner relationships we have with payment associations, corporate credit unions, and fintechs. Those relationships represent 8,000 financial institutions. What's next? We already have on paper or an agreement in place to onboard an additional 500 financial institutions with a very clear path for 10% of the market and $10 million in ARR within the next couple of years. We've also been in the news a lot. I'm trying to hurry now. I'm excited to announce today that we're going to be kicking off our Series A conversations. Today with the Series A, we already have $1 million soft penciled in, a lot of it from a very large investor. So if you have questions or want to talk with me or Ram, feel free to flag us down or stop by C22. Thank you.
Okay, judges, who has questions?
Should we go in order or?
As inspiration strikes.
Okay. So one question I had, so it sounds like you're really, this is business banking, right? It wasn't quite clear. You mentioned business banker at one point, so you're not going after consumers. Got it. And so you mentioned you have fresher, more complete data. Why is your data better than a ZoomInfo or whoever else you're using?
It's not necessarily it's better, but for a lot of the financial institutions, they might have ZoomInfo, and then they have to download lead lists and upload it into a CRM. That's if they have a CRM. When I was at Wells Fargo, I know it's a big bank, I managed $900 billion in payments. I didn't have a CRM. And if you're the 98% of the FIs under 50 billion in assets, a vast majority do not have CRM or ZoomInfo or any of these tools. Literally, it's all Excel.
It was an Excel. Got it.
Mm-hmm.
You shared that you embedded AI. Can you talk a little bit more about that?
Yeah, so we have Gemini embedded all throughout the platform. We didn't want to show it just because it takes a little bit of time to generate, but you can query, if we're connected to your core data, you can query your core data. You can upload your own products and service and fact sheets. You can query on that. We actually have a relationship with Nacho where you can ask questions related to Nacho rules and get answers back in seconds. We're one of 2 companies in the world to have that. You also have the ability to, within a query, generate branded reports for your customers. So there's a lot of things there. We just didn't demo it just because we didn't have the time.
What are the data sources you have for new clients? Is it existing public sources, or are there proprietary data sets you're able to tap into as well?
Yeah, we're using public sources and third party, really. Now, I will say each financial institution, depending on what they're targeting, they might upload their own lead list and have our AI kind of scrub it and help with it, but generally speaking, third parties and public information.
And building on that, what is your can you talk us through your infra and data stack? What do you think needs to be core IP, and what can you buy?
So when you talk about core IP, can you expand on kind of what perspective?
What do you think needs to be a technical moat for the company, and what is okay to purchase and leverage as a generalized solution?
Yeah, I think the foundation of our tool really is the CRM, and we built that from scratch. And then a lot of the ancillary services, like within the reports, we have third-party benchmark data. Obviously, we're not going to pull all of our customers and benchmark all of it, so that would be third-party. So it really, I guess it kind of just depends, but I think it all kind of centers around that CRM.
And one thing I want to add on to that is the platform itself is like Legos. So we meet our customers where they need us to. So if they have a portion of our solution, we're able to play nice in the ecosystem and complement the gaps.
Actually, can I do this? Can I piggyback off this or no?
Yeah, please.
All right.
There's no rules. Come on.
That's a good point, because we have a lot of customers who use us for everything. We also have a lot of customers who might have Salesforce or Dynamics and see us as a better sales enablement tool to then feed all of our interactions and data back into their CRM. So it really can be modular.
So that's actually a good jumping off point for my question here, which is what does your actual implementation and sales cycle actually look like? Because generally with banking, there's already existing systems, there's already data systems. It's kind of a pain in the ass to actually go integrate all of this. So the modularity is helpful, but what does that actually look like when you implement it?
It's worse. It's horrible, right? And so our approach is very much modular. We can. A lot of the services don't need any core integration. So normally we'll start with either using our AI tool with access to Nacho rules, or being able to generate reports without core data. Of course, it's better with core data because the user could just click a button and generate these customer-facing reports, but a lot of times they don't need that to start with us.
And from a sales cycle perspective, John, and you were at Palantir, so you'll know a lot about this. You work with governments, Fortune 100s. It's a long sales cycle if you try to present what we just showed you, the 3 layers of it. But if you're focused on the entry point being compliance, which is non-negotiable, which the Nacho rulebook allows us to do, which every FI in the country needs. That is our land strategy, and then the expand is the additional modules. So we don't go in there pitching the kitchen sink. We'll go in there focused on something that they absolutely need, and then we'll build off of that. Yeah.
So is it right to think that, I think you said you have about 100 paying customers, is that right?
180, over 180.
180. All of them pay for this compliance module? That's how you land?
Most of them, yes.
Most of them do. And then what's the next most popular one?
The next one is going to be that checklist you saw for payment audits. So the payment audit, believe it or not, today, emails are flying back and forth, spreadsheets, you have Post-it notes. So the payment audit tool is instrumental in organizing that and giving you an audit trail, date, time, and author stamp. So that's the next best product. Again, non-negotiable. Then from there, we have.
Sorry, forgive my ignorance here. What is a payment audit? What does that mean?
It's a bank has to audit their originators of either ACH or remote deposit or wires to make sure, like, hey, this company has the right limits and things in place so that they're able to initiate payments on, like, we're able to initiate payments on their behalf.
I see.
Yep.
So that's right. They're existing customers.
For their existing customers.
Okay.
So if you're, as an example, if you're at a smaller financial institution, you might have 500 originators or people that you need to perform audits for. It's literally a couple people in sales emailing the customer back and forth, collecting all that documentation, and then pasting it into like a master Excel doc.
Got it.
Yeah.
All right, we are out of time, so give it up for Identify.
Thank you.
Thank you.
Let's bring out our next startup, SciDeploy. Presenting for SciDeploy is founder and CEO Tina Williams-Karoma.
Hello, good morning. I'm Tina Williams-Karoma, founder and CEO of SciDeploy. SciDeploy enables organizations to make change with confidence. Security changes to critical systems with the confidence that those changes will not disrupt operations. We have two bookends. CrowdStrike, where changes were made too quickly, and that caused disruption. In the case of Change Healthcare, changes weren't made quick enough, security changes, and that itself caused a hack and disruption. The problem is that the current approach to cybersecurity is leaving us with $1 trillion cost in cyber crime, and yet budgets globally are only in the billions, and this gap is widening. And with the cost, it's not just data. It's actually human lives and safety when you consider critical infrastructure. The current approach includes a lot of detection and response, which is needed, but the investment in detection and response is disproportionate, especially when you have the acceleration of attacks with AI. By 2026, 40% of companies are moving to adopting preemptive solutions. This is where SciDeploy comes into play. Specifically, we are in the automated exposure management part of preemptive. You have an alarm system that goes off with detection and response, but that's already too late because the adversary is in your system. We help to reduce that attack surface and minimize the probability of a successful attack. SciDeploy has many different features. It is a patented solution. We focus on helping organizations to understand how their systems operate on a normal basis. We give a sandbox on demand to do testing of changes prior to them rolling out to production. David and I, we had started working together over 16 years ago. We've both been in the cybersecurity field, infrastructure compliance, for over 20 years each. We've worked at some of the largest companies in the world, and we are very well positioned to not only understand the problem, but understand the solution. So we're going to show you a bit about SciDeploy with our demo next. So, David, here's the thing. I want to know, I had a colleague of mine, they had Windows 11 deployed, they're a manufacturing outfit. With this exploit, they lost about a day worth of production. So I need to know, do we have Windows 11 in our environment? If we do we have that vulnerability on our system? And if we have it, does it look like it's been exploited? And can we test without any disruption so we can roll out the change?
Sure thing, Tina, we can do that. So the first thing we're going to look at is our discovery map. So the first thing is we do have Windows 11 within our environment, so we can select it down to that. The next thing that we want to go to is actually discovering whether we have the anomaly. So in this system, we are actually looking at all workloads as well as endpoints and the insights related. So we're looking at current insights. We don't have any anomalies. Typically, anomalies would be in purple, so we're looking good there. So now let's move on to actually, do we have this vulnerability? So with our actual central dashboard, we can actually see the network map discovery as well as the inventory, but also we can see actually there is the vulnerability on this particular machine. So let's go over and actually run through a test. So we're going to go to the Sci dashboard. Here we're able to actually do a digital twin, create the twin, and then we're going to move on over to the actual tests. We did create a test as far as our recording. So now we're going to move on to the actual test, and we're going to look at our test here. In this case, the AI engine detected that we are going to do a patch check. We're going to launch the particular application on this machine, and then we're going to test the sound, and then from there we're going to return whether it's safe or not. So let's go ahead and run that test. And that test is going to take a matter of minutes. So again, this is running it in the sandbox of the digital twin. And then from there, we're going to head over to our testing report. And then we're going to look at all the things that were launched from a system-wide. We passed, we ran the patch check, we ran the sound test, and then from there, we returned to safe. So this patch is definitely ready to go for the production environment.
Great. All systems go. So back to our presentation. We're safe to deploy. Our business model, we focus on middle market with financial services and also enterprise with health systems. We have a channel where we sell through IT consultants, and we have a freemium version that allows individuals or smaller organizations to use our agent, but with lesser features. SignalFire, our customers in current traction. Our biggest announcement here is just we have a major software license agreement with a hospital system, which we're really excited about, and that will be our first beachhead customer. SignalFire was recognized as a product winner in the AI and data category. So if you're on LinkedIn, at SignalFire, just hit yes if you resonated with this presentation. For those of you here, you can have a 90-day trial with us. Just scan the QR code, enter your information, we'll follow up with you. We appreciate your time, and if you're ready to make change with confidence, SignalFire is the future. Thank you very much, and we'll take questions.
Okay, judges.
I can start here, but I'm curious, like, how it actually works. So is it an agent that sits on the service, or like how exactly are you gathering this data and whatnot?
Yes, absolutely. So it is an agent that you can install so say an organization identifies their initial tier 1 system. This is our main server. This is where one of our tier 1 systems resides. You would deploy the agent there first, and then what we do with our discovery, asset discovery, is we say, hey, okay, well, you know the main server, but we want to make sure we account for the entire workload, right? Like, so if there's any dependencies, if there's other servers or systems that it relies on, then when you're doing your testing and you're trying to answer the question of, will anything break, you need to account for the entire workload that comprises that tier 1 system. So then the agent can be installed, like with the entire workload. We can provide, as you saw, like that asset and dependency map. And then in production, what it does is our agent is learning. So from a machine learning perspective, it's observing how does the system operate and how is it used on a normal basis. And out of that, in an intelligent robotic process automation sort of capacity, it creates automated functional test scripts that reflect that normal use. So those are the test scripts that you can use when you take the snapshot of the digital twin, which can be deployed in either a cloud environment, in a virtual environment, or on-prem. You run those test scripts before and after the change, and we provide that report that you saw that says pass, 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 or fail.
I'd also like to hear more about the onboarding process for new users, and especially how you're thinking about creating new retentive behaviors out of these initial users and future expanded user groups as well.
Yeah, so what we found to be extremely helpful is using our freemium version for onboarding. So even in the case of the hospital system, what we did is we made the freemium available because they were wondering, well, what is the agent like? How's it going to work on our system? How easy is it to install, et cetera? So we point them to the freemium version first so that they can get that experience, let their technical folks put their hands on it. And then from there, we start going through with them to identify the tier 1 systems that they want to deploy to first. Our system has a lot of different capabilities, so they get a full suite with the current annual license, but there's some sticky items in there related to the asset discovery and mapping. So we plan to take the approach like Google did, where it had at first like, you know, free or business, and then they started bifurcating from there with like enterprise, enterprise plus, enterprise premium. So that's our plan and roadmap for the future.
Can you talk a little bit about your sell model? Because it sounds like the buyer's cybersecurity, But the people deploying the changes are not cybersecurity teams, right? It'll be IT or infra teams or whatever. So like, how is that working? It seems like a hard motion.
Yeah, actually, we focus on selling to CIOs and to the infrastructure director of infrastructure. So that's where we focus. The security teams are definitely stakeholders. So even in the example of the hospital system, we stayed very close with engaging with the security team, but they became our sponsors for getting us over to the infrastructure side because they were like, yes, you are going to help us deploy our patches and security changes faster. But our actual buyer, very good, as you note, is the CIO shop, the directors of infrastructure.
So the budget's coming from IT and infra
Exactly.
teams.
That's exactly it, yes.
What does the implementation process look like, and how long does that take on average?
Yeah, so the implementation process is going through identifying the tier 1 system that they want to start with, and then the agent gets deployed on the main server or infrastructure. And from there, there's a discovery process. All of this is within a matter of minutes, right? Like, so once the agent is deployed, you can do that discovery process. The longest cycle of time is with the machine learning because we want to be able to ensure that we can account for all of the system uses. So organizations will tell us, hey, you need to observe the behavior for this system over 2 weeks or over a month to make sure that we see the entirety of how that system is used and operates on a normal basis. So that's the longest time, but otherwise everything is within a matter of minutes in terms of our ability to deploy.
And then once you're deployed, how does an organization track the ROI or the viability of the solution?
Yeah, so great question. One of our pilot customers, they did not have a test environment. They didn't have a way to create like automated test scripts. All of it would have been manual. And this is where we sold through an IT consultant channel. And so for them, the IT consultant would have had to build the entire like non-production environment, do the test scripts, et cetera. So long story short with them, they saved over 200 hours for one change. So they're able to track it with their ability to how quickly can we deploy a patch or a change with testing and have that confidence. So that's the life cycle, and that's the metrics that they're comparing with. How long does it take for them to test, get to a point of confidence for deploying a change?
One question, so it sounds like you deploy an agent to kind of like a key machine
Yes.
that they give you, and then let's say it's an application server.
Yes.
Let's say then you do this asset discovery, you discover it's using a database over here.
Yes.
Does your agent need to be deployed on this database machine as well?
Currently, yes. It would need to be deployed on
So
that as well.
everything that you monitor needs to have an agent installed on
It
there.
does, right.
Got it.
Yes.
And do you kind of run into issues with, you have a sensitive machine like a database, let's say, installing a piece of software on it, is that something that customers have resistance to, or you haven't seen that?
Not presently, and that's where, again, the freemium version is really helpful because the agent stays the same, right? Like how it's deployed and things like that. Different features are unlocked, right? And so like the size of it can change, but we have a very keen focus on keeping the agent really small. So they get a level of confidence by having the ability to actually deploy on the different assets that they anticipate being in scope.
Got it. Thank you.
You're welcome.
All right, let's have one more round of applause for SiDeploy.
Thank you.
It's time for our third startup battlefield company in this round. That company is CharterSpace. Presenting for CharterSpace is founder and CEO Yuk-Chi Chan.
Hi, I'm Yuk-Chi, founder and CEO of CharterSpace. Space has a money problem. Today, fewer than 300 of the over 14,000 satellites in orbit are uninsured, leaving over $150 billion completely exposed. Without insurance, there is no credit. Without credit, there is no capital. And without capital, the space economy stalls. Now, this isn't the first time humanity has faced this problem. Before we had rockets, we had sails. In the late 1600s, exploration was a gamble. Each voyage risked everything a captain or an investor owned. Then, a new kind of explorer emerged. In a little coffee house in London, ship captains and merchants gathered and traded stories of distant horizons and found the courage to fund the unknown. What began as risk became an opportunity and then a market, and eventually Lloyd's of London, the foundation of modern insurance that transformed exploration from a personal gamble into a global economy that carried humanity across and beyond the seas. Chorda is building that infrastructure for space. We are the first space fintech company. Our platform bridges engineering, insurance, and finance by capturing real-time engineering data of spacecraft as they're being built and transforming that data into a living picture of spacecraft risk. Here to help me demonstrate what Chorda actually looks like is this satellite built by our friends at the University of Washington's Husky Satellite Lab. They're building more satellites just like this one on Chorda right now to be launched into orbit over the next few years. Over to the demo. Today, we're going to use our software to take a look inside. Now, if you're building a satellite, this is what you'll see when you first log in, a living snapshot of your mission. Every subsystem, every test, every single change made by every single engineer. This is your entire program in a single glance, all updating in real time as your team continues to build. With the data we capture across our verticalized feature set, our AI-powered satellite health check analyzes and estimates risk before it ever becomes a problem. We flag components that need attention, highlight potential risks, and give engineers insight on how to strengthen their designs long before launch. Now, let's switch perspectives. This is what this same satellite, back to the demo. This is what this same satellite looks like to an insurance underwriter who's being asked to bet millions of dollars on the success of this mission. Same data, different perspective. With Chorda, underwriters can watch missions unfold live, track progress as risks are retired, and give continuous feedback. Each fix and each improvement does something bigger than just build a satellite. It builds trust, and that's ultimately what Chorda actually does. We build trust, not just in machines, but in engineers, in explorers, in dreamers who dare to reach for the stars. Back to the slides, please. We are already working with the US government, NASA Jet Propulsion Lab, and the 6 largest insurance companies in the space market. Our customers, including commercial companies and universities, are already building over 24 satellites on our software, with over 100 more waiting to join. Our team has lived this journey. We have been investors, engineers, and program managers. We come from NASA, the US Air Force, and Maxar. I started my career as an engineer in the Singapore Army, where I served with my co-founder, Yukun, and I was an operator in the industry for years as both a space lawyer and a satellite mission manager. We are already backed by top fintech and space VCs, and today, we're taking the next step to lead the charge for space insurance. Chorda is proud to announce that we have acquired a YC-backed insurtech and insurance brokerage. Bringing brokerage in-house lets us use our data to bind policies with our insurance partners directly, not just for your space assets, but for every insurance need your space company has. We're bridging the full spectrum from data to coverage and delivering a seamless, high-touch experience. Our first 4 customers are already on their way to more accurate and comprehensive coverage. Today, we start with insurance, but we're going so much further than that. To build credit, structured debt, and the financial infrastructure to scale space, we need what every frontier relies on: trust. Chorda is building that trust, and with that, we can build the banks, the lenders, and the long-term capital needed to fund the future. That future starts with data. That future starts with insurance. That future starts with Chorda. Thank you for your time.
Judges.
By the way, I misspoke. It's 300 out of 14,000 satellites that are insured. The rest are uninsured. My bad.
Actually, question on that. I assume a lot of them are uninsured because the United States government probably doesn't need to take out insurance on the satellites it launches. Or is that a bad assumption?
You are correct. The US government is obviously the world's largest self-insurer of assets, but most assets in orbit today are actually privately owned. So most of them can't get insurance because, one, fundamentally, it's way too expensive to underwrite a lot of these assets, which is exactly what we address. We bring down the cost of underwriting massively to expand the market so that more assets are eligible and capable of getting insurance.
Got it. So if you look at your TAM today, it's the private assets that are being put up in space. And how many of those a year do you estimate there are that would be eligible kind of for your addressable market?
Yeah, so over the last few years, we've been increasingly launching more and more things, both in terms of individual satellites as well as overall mass. And so we estimate that at least 1/3 of all satellites that are launched in the next few years will be eligible. But interestingly, that 1/3 actually accounts for the majority of value that's launched.
Got it. And can you put a dollar number on that value, roughly?
Yeah, absolutely. So we estimate, so the launch numbers last year were about 2,800. We expect somewhere around 3,200, 3,300 launched this year. So if you assign sort of 1/3, and the average value of a satellite launched is somewhere between $5 to $10 million, so about $300 million worth of assets goes up every year.
Got it.
And that's rapidly growing.
Thank you.
Are you taking on the balance sheet risk from an insurance perspective, or have you partnered with financial institutions? And if so, what do those partnerships look like?
So that's a great question. We do not bear any risk on our own balance sheet. That is a possible expansion in the future, but as of right now, we are a technology provider and we are a brokerage. And so we work with the carriers, and the carriers bear that risk. So those partnerships right now, what that looks like is, obviously we have a brokerage relationship with them. But in addition to that, we also have a partnership with a brokerage at Lloyd's that places the risk with the European market, where a lot of this risk predominantly sits. And we also work directly with the underwriting teams at these carriers, and we provide them our software. And so that interface that you saw earlier of the underwriter screen, that's what the underwriters at these carriers actually interact with. They see all the data that's piped through us.
Are the environments similar enough? Like, how hard is the implementation and integration with data with the different satellite builders?
So that's a good question. It is really, really challenging. That's actually one of the uses. That's actually one of the ways that we utilize AI. We use NLP and RAG to actually make sense of a lot of the unstructured inputs coming in from a lot of these companies. But that's one of the main reasons why we actually have a software tool suite that we deploy directly with these engineering companies, so that they are building natively with us.
How long is that implementation cycle for you guys per company?
So it really depends on what point in the program we catch them, but generally it's somewhere between 2 to 4 weeks to get a team fully stood up, and as they sort of accelerate, we get further and further entrenched.
My question is also building on that as well. I'm curious about how generalizable a lot of these verticalized test suites are, how much depth you can bring as a product suite, and how much customization work you have to do with each type of company, but also type of product. And then follow-up question also on how you think about getting into the developer environment and working alongside other pre-existing testing suites.
Yeah, absolutely. So with space, it is fairly generalizable within the vertical itself. There's a reason why we haven't elected to go into other industrial verticals, because there are a lot of different challenges, as you've noted. Within space, however, our test suite is fairly extensible. So let me give you an example. We actually initially developed our test management suite with NASA JPL, not to help them to help them support not a satellite. Well, okay, technically speaking, it is a satellite in the sense that anything that leaves our atmosphere is a satellite. We're actually helping them conduct a series of tests on the Athabasca Glacier in Canada for a robot snake. So the robot snake is one day meant to go to Saturn's second largest moon, Enceladus, to look for life. That's some point in the 2040s. And what we noted was our test suite and the features that we developed and the data model that underpins all of that, most importantly, was actually fairly extensible to include a robot snake. And so in terms of the spectrum of types of hardware that we can support, anything from it's gone. The student-built CubeSat to robot snake built by NASA, we can account for most of that. In terms of how we actually plug into existing tools and existing environments, we have a suite of native integrations. We also obviously have an API that allows developers to plug in their existing tools, but we much prefer folks adopt us natively.
There's not that many space insurers out there, right? So like sitting in the middle as a brokerage, the only real value that you're bringing to the table is that piece of software that either helps the insurance people underwrite or is helping the satellite creators actually create better satellites. So like, what's the more important side of the market? And outside of just like getting insurance, is there actually a desire for this type of like how dire is the pain point?
Yeah,
Answer
absolutely.
quickly.
So, okay, we'll do this quick. So you're correct. There are only 22 carriers globally that do space. We're hoping that market will expand, and we're hoping that we will help to expand that market. But one of the biggest costs, like I mentioned earlier, is that insurance is just way too expensive to underwrite and way too expensive to acquire. So one of the things that we actually do for these carriers is we help them disaggregate that risk and get a much larger market of small satellites that are currently uninsurable. And in terms of the actual software itself, well, most satellites are built on Excel. It's not great, and a lot of satellites get lost because of easily preventable engineering errors. One of our insurance partners actually said to me he's paid out hundreds of millions of dollars in his career for hundreds of dollars worth of parts for easily preventable mistakes. So on the risk management side for both parties, we serve a critical need.
All right, give it up for Charter.
Thank you.
Let's bring out our next startup battlefield competitor. That is Cypher. Presenting for Cypher is founder and CEO Janae Gamage.
Hello, my name is Janae Gamage, co-founder and CEO of Cypher. And our vision is a world where money moves freely. And there have been some revolutionary companies who have come in and revolutionized their vertical, respectively. For infrastructure, we have Stripe. For data, Plaid. For payments, PayPal. The only vertical that remains virtually unchanged is lending, and it's the most important to us. In the past 18 months, we have fulfilled that gap as much as they have. Our team has 4 exits with a combined valuation of just under $1 billion. I'm a data analyst by trade with an economic development background, and I was actually appointed by the SBA post-COVID to come in and help small businesses with readiness so that they could access capital through lenders. After seeing invisible businesses die, I joined forces with my co-founder, Ilya, who was at Citibank, creating risk models for the past 12 years, and also packaging up that debt from the small businesses. Our engineering is led by an AI ML expert who actually built payment rails to an exit. We came together because, as I'm sure you're thinking, I've seen tons, maybe 5 to 10, of softwares who have come into this space to automate. I myself have actually seen at least 50 in the past 10 years. And the problem with this is they are point solutions. They do not address the problem at root. Lending requires Lending requires a process that is built not for the construction firm with 10 years of business and collateral, but the landscaper with seasonal revenue and maybe one piece of equipment that wants to expand. This has created a $14 trillion deficit for the US every single year. And not only are banks scrambling to try to fill this gap, businesses, the ones that we've nicknamed the backbone of the economy, are closing at an alarming rate at 520 every single day. And when I say that, most people think these must not be viable businesses. And so, to prove it, I went and applied for some loans at Cypher. I first started at a top 5 bank, and before I could even get to an application or talk to a person, I was denied. Let's go back for me. Thank you. Next, I went to a CDFI, the lenders that are specifically created and funded for businesses like me who sit right outside of the credit box, startups with less than 2 years in business. I was served this paper form. I submitted it on October 5th, and as of today, October 28th, I still haven't heard back, so I'm just going to assume we are not getting that loan. Back to the slides, or excuse me. There we go. The solution for us was very simple. We have to make capital accessible to everyone to make money move, which means we have to update the infrastructure to make it work for everyone. That means for the ready accelerating a process that costs roughly $5K and takes 12 hours of manual work for every single applicant. And for those that aren't ready, reinventing the declines so that we can embed readiness right into that process. Cue demo. So now I'm going to apply at TechCrunch Capital for a loan as Cypher, who is using our platform. First, we'll surface financial, operational, and compliance health, show them their readiness, and we'll also show them which products they can apply for at TechCrunch Capital that they have most likely to get approved for. We'll also give them an action plan that surfaces the gaps that will prevent them from submitting this application. Let's go see how the lender looks. So they will actually see Cypher as a great deal to underwrite, but we need those documents that are missing: business plan, financials, and tax documents. So let's send an updated action plan. There we go. From there, we can finish the application and attach all of those documents that are missing right from the platform. Let's do tax documents. We'll go ahead and submit back business taxes, use the software that we use to file our taxes, and after we verify our name, we'll be able to attach them right to the documents. Back to slides. This may seem very simple, but the reason we were able to turn a 12-hour process into just under 2 minutes is because we've built our own proprietary model that is actually trained and fine-tuned to understand the messy financials and the behaviors of technology companies, landscapers, barbershops, gig workers. Those that come through that are told they are not ready, 40% of them get to approval in less than 45 days. Because of this, we have grown to just under $3 million in revenue in less than 18 months. We're actually rolling out to 3 states with civic lenders who understand that for every dollar we put into a small business, $4 is returned. So not only are we saving businesses, we're saving economies at scale. This has pulled our roadmap, We're also powering small business readiness in host cities that are hosting these global events so that they can turn these bankable moments into opportunities. That has accelerated our roadmap by at least 2 years. For now, we can be the readiness data set, the only one that can power an entire financial ecosystem and also become rails through our API for those competitors that I mentioned earlier and turn them into customers. Money movement is essential not only to our economy, but our existence. These startups that you've seen pitching today will not exist without it. So if you feel the same way and believe in our mission, please come see us at booth C23. If you're an investor, we'd love to talk to you. We just opened our round yesterday. We have term sheet in hand and around 40% allocated. Thank you.
Okay, judges.
I guess I can go first. So you mentioned a lot of these businesses are thin file, don't have a lot of traditional kind of credit bureau data on them. What are the data sets that you're using to underwrite them?
So we have external data sets like the business, the legal. Out of all the softwares that exist, there's only 2 that can access in all 50 states, so we're one of them. We also are pulling in their financials. Our model actually started with transaction enrichment. We were using Plaid and it had about 60% of accuracy, so we knew we had to build our own algorithm and model to surface those financials, do the spreads. So that's the biggest thing, is the cash flow underwriting, and also doing the verification, pulling down all of those documents, the tax documents, and then looking at the behaviors of those small businesses. So when we started, we didn't buy data sets. Those were already biased and excluded these type of businesses. We went and did pilots with large institutions and took in that data set directly from the businesses that are just like these.
Got it. Thank you.
What's the hardest part? Like you showed the lender that had the paper application, and now you're going to go try to sell to them. Like what does that sell to look like?
You said now we're going to go sell to those lenders?
Some of your competitors, you were saying.
I mean, that type of lender is extremely easy to sell to because they're using a paper form. So it's slow. That's the reason why it's probably taking a month, because there's a human on the other side trying to get those applications. We actually entered the market with assumptions that we would primarily serve to lenders like that. So that was a mission-driven lender. And we got a quick yes, but grant cycles, funding, prevented us for getting through implementation very quickly. So that's when we pivoted to looking at civic leaders to subsidize the cost for small businesses and push it out. So first year we were at like $1 million in revenue, and just in the last 8 months we've grown that to 2.9. So it worked.
How do you think about your go-to-market motion? It sounds like a lot of the lenders you're selling into are regional, and so that's a fragmented ecosystem. How do you efficiently go to market?
Yeah, actually, we were once we realized mission-driven lenders wouldn't be like our primary customer or ICP, we were still serving mission-driven lenders. They were just community banks or credit unions.
So,
did I answer your question? Oh, go ahead.
Yeah,
did I answer your question? Sort of.
Sort of.
Yeah. This is like traditionally one of those markets where you have incumbents, like, for example, a Blend Labs would easily do something like this. And then also, everyone already has a process that already works. So it's not like there's a forcing function for them to actually switch. So in a lot of cases, you have companies that get to a few $1 million, maybe tens of millions of dollars of revenue, but then they kind of stall out, and that venture scale of like $1 billion in revenue doesn't really happen without some kind of macro forcing function. Mm-hmm. So how do you think about that? Or like, what's the trigger?
I think it's the readiness and the subsidized cost for small businesses. Also launching that API to businesses like Blend, because we were able to move so fast and bring in data sets that grew our model. We've reached fluency, and also we're about 3 years ahead of them as a first mover to build that type of model trained on these. They're also not focused. They're trying to automate the underwriting process, and we're coming in and embedding that readiness first and pushing them through. As for your question, as far as them creating something like this, I'm sure they have the data set, but they don't have the team, and I'm very proud of what we've been able to do. And I also think that, the financials that you've created and the algorithms that you've created are proprietary. We'll file for our provisional patent here soon, the next 2 months, so we'll kind of take over that market as well. But the government subsidy is like becoming our biggest ICP.
And I'd love to hear more about the proprietary algorithms. Can you walk us through why you have a technical insight there and how you sustain that?
Our head of engineering built the same thing without the algorithm, so it's more of a stack. We started with transaction enrichment because, like I told you, Plaid data, 60% accurate. So we were able to do cash flow underwriting first, and then we realized we had to keep building on that and focus on the businesses that actually weren't getting through. So similar to our competitors, we were kind of doing the same thing and focused on that underwriting aspect. Once we saw that there was different programs, SSBCI money, all of this government funding coming down, and the ecosystem couldn't still get these businesses, which are 80% of the businesses that make up the 34 million. We decided to shift to the readiness, and then that opened up lots of opportunities to not only bring in funding to work with government, cities, civic lenders. Our biggest our customer is the Department of Commerce.
And on top of that, how do you think about baking in regulatory requirements like housing, employment, and credit regulation into the algorithms and data collection?
Yeah, absolutely, we do. We actually subject ourselves to audits that we're not required to do so that bankers trust us. We do the same thing that they do to be a bank. So does that answer your question? Yeah.
Sort of.
So.
All right, I think we are out of time, so let's have one more round of applause for Cypher. We have one last startup taking the stage right now. That startup is LOAI. Presenting for LOAI is founder and CEO Owen Sakawa.
Good morning, good morning, good morning. Just by a quick show of hands, how many of you have used an AI model this morning? Okay, great. How many of you would trust the same model to make decisions on your healthcare? Exactly. That is the gap we are here to fill. My name is Owen Sakawa, and I'm the founder and CEO of Elo. At Elo, we are building the immune system for AI, a technology that detects hallucinations and biases in real time before they hit production. So let's dive in. AI is already here, and it's breaking the rules, from fake anatomy to $1 million lawsuits. We saw the other day Deloitte being sued for misreporting on a government report, or even Google made Gemini coming up with a brain structure that doesn't exist. It feels like driving a car without brakes. And trust you me, it's going to be really chaotic in the next few months. And the hidden cost of AI are massive. The hidden cost of AI hallucinations are wildly massive. Penalties and fines up to $50 million. Trust in your customers is lost in an instant. And the worst part is 70% of these incidents are only detected by your customers and your regulators. I'll let that sink in for a second as we go to the next slide. Why? AI sprawls. Companies are deploying hundreds of models, unreviewed models every single day. 80% of those outputs are hallucinations, while on the other hand, compliance, legal, and engineering team are all pointing fingers at each other. When a model hallucinates, who's accountable? Is it the CEO, is it the data engineers, or is it the company that deploying it? And why? What if you could see these incidents before they actually happen? What if you could detect those hallucinations before it gets to your customer? And that's why we are building Elo as the immune system for AI. Just as our body needs the immune system to detect viruses and bacteria, AI needs an immune system. A technology that doesn't just enforce, but also make sure you're doing the right thing. And how it works is extremely simple. We expose the risks in real time. In case any of those outputs are violating any compliance policies, we auto-patch that policy in real time and give you an incident report that you can give your regulators. The reports are massive. 95% safe outputs have been verified, while 59% we've been able to reduce the time spent by your team trying to track down where these incidents happen. And let's dive into the demo. So in this quick demo, we are going to see how our technology is able to verify every single output generated by your model. As you see, a user asked a question right there. The model replied, but before that reply gets to your user, it has to be validated. It has to be authenticated. I don't mean plump filtering. I mean verified in real time. And you can be able to see the score. Did this output violate any policy? Did this output hallucinate? Did this output create a bias that will land you not just in the headlines, but in the laws, in the courts? And this is not a niche problem. It's a $300 billion problem. Regulators and companies from healthcare, financial services, and legal are all hitting the same wall. AI without enforcement is a big risk. And in the next 5 years, every company will either have an AI immune system or a class action lawsuit waiting to happen. And it's already working. In the last few months, we've stopped over $200 million worth of enterprise risks. We've generated over $5 million of annual revenue, and we're converting pilots every single day. And the best part is, if you see a doctor telling you your AI stopped a cardiac arrest before it hit a patient's chart, just know one thing: you're saving lives, not following the hype. And my team, we've done this before. My background is in technology. I founded my first company and sold it before I could learn how to drive. I've been building companies for the last 2 decades. My co-founder, Aaron, has built one of the first payment unicorn out of Southeast Asia called Paymire. And Jackson, our CTO, has been in the trenches building companies from different industries. Our advisors speak for themselves. From John Tallinn, the co-founder of DeepMind, to Terry Tao, a UCLA professor, to Joshua Achem from OpenAI, and Mike Parker, one of our advisors from Nike. Thank you. My name is Owen again, and we are the immune system for AI.
Judges.
Yeah, I I think very interesting on the immune. Can you talk about immune system for AI? Can you talk about how you guys do this?
Yeah, sure. So what we do is we deploy modules into your pipeline. It sits on top of your output layer, and it listens in to every single decision your AI is making. It's like an antivirus for any AI systems in such a way that every time your model makes a decision, it goes through 3 different modules. The first module is the autorug that ingestfully be able to identify the sources of each and every output. The second module is the truth checker that validates those outputs against your own enterprise data and also against the regulatory databases. And the last module is the autopsy that audits that entire process. Any questions?
That sounds like you need a knowledge graph somewhere that anchors facts. You need a knowledge graph somewhere to anchor facts. So are you constructing that off of internal data? Are you building it yourself for external data?
No, we use a technique that doesn't generate data. So we sit on top of your output using a technique called Bayesian estimation technique. All it does is enforces everything that your model is saying. If a model, especially, for example, in healthcare, you're using a device in healthcare and your model makes a decision. So our guardrails, our immune system, it's able to ingest that data and validate it against verified sources in real time. The verified sources could be your own enterprise data, could be verified sources, or it could be regulated.
No, exactly. But in order to actually verify against those sources, you need to use some technique, right? So are you constructing a knowledge graph off of those sources?
Technique.
Okay.
Yes.
Can you give me a sense? You mentioned 5.6 million in revenue. Congrats. What's the sector breakdown? Kind of how should we think about this customer base?
So our biggest industry is healthcare because healthcare is one of the industries that adopts new technology very rapidly. And the issue they're having right now is they're deploying these models without any form of enforcement, without any form of a guardrail. And I gave you an example of where Google made Gemini recently fabricated a brain structure that doesn't exist. That brain structure, if it ended up in a patient's discharge form, would be having a different story today. So our biggest industry is healthcare. The next is government and financial services.
Got it. Thank you.
There's a lot of noise across the ecosystem in building trustworthy AI. I think this is especially difficult for startups that are trying to cut through and solve these problems in more niche domains. We're seeing companies are trying to do this through compliance, cyber, dev tools, full stack solutions, companies including Perplexity, Cloudflare, Hidden Layer. How do you think about just cutting through the noise and communicating the differentiation of your solution?
Yeah, that's a good question. So we've been talking to a lot of service providers from Anthropic, Gemini, Facebook Llama, and they're saying the same thing. Mm-hmm. Our technologies are very powerful, but all they do is monitor. Mm-hmm. If I'm only telling you about a problem after it happened, what is the need of having that in my pipeline? So we are here to ensure that those problems don't hit your patients, they don't hit production, they don't hit those regulators. Mm-hmm. So we are complementing them, and we're already working with partners like the EU Commission, like NVIDIA, to be able to complement each other in a way that we're not just here to build faster model. Nobody wants a faster model. Mm-hmm. We want a model we can actually trust. And that's why we are building Elo, because we believe the human immune system was the most perfectly designed system, because as Owen, when I get sick, it fights. Like even now, you can hear in my voice, my immune system is working. Mm-hmm. It's working in real time. And that's what the Elo immune system is currently doing in the enterprise. And a lot of companies are slowing down deployment because regulations are coming. We have the AI Act. We have different, right? We are in the early stages before cybersecurity was anything, and then we started having GDPR. We started having ransomwares everywhere, and we started having people now saying we need a way to protect these data.
I'm sorry, go ahead.
Can I ask you a quick question? Where do you see this maybe a little bit of a related question. Where do you see this going over time? Right? I'm sure OpenAI and Google, Gemini, et cetera, they themselves recognize these issues, and I'm sure they're working hard on fixing, let's say, hallucinations or whatever it might be internally. Do you think there's going to be a room for kind of like independent third party to be doing this over time?
That's why we're here. They can't audit themselves. They need an independent party like Elo to make that process feasible, because regulators, when they go to them, they all tell them, we want your own internal audit. No, they'll bring a third party to do those audits. And that's why we are working with the EU Commission, because they have mandated our company to audit all public health LLMs deployed all over Europe.
So this is being mandated by regulators?
Yes.
Got it.
And that's how we have access to all these database and regulatory databases that ensures our technology is constantly updating, because as companies, they won't be able to pay attention to all these changes in regulations. But they need a solution on top of its game that is constantly updating itself in real time without affecting the infrastructure, their latency, or their consumer power.
How is the buyer or user able to measure the number of hallucinations that you're able to catch, and what is the viability?
So
quickly.
we provide heat maps. So every time a hallucination happens, you're able to get a heat map to tell you, this is a hallucination, this is why it happened. We basically give you a lateral movement from when the user asked a question to where the AI answered, and you're able to pinpoint if the AI hallucinated. This is the data that caused that hallucination, and this is the mitigation strategy that would be put in place. And the best part is, if a hallucination happens, we just don't tell you this is an hallucination. We auto-patch that in real time. So you didn't even know it happened, but you'll know when you come and see a report, oh, this happened, but it's a good thing we have Elo in the background.
All right, give it up for Elo. And that wraps up this session of the Startup Battlefield. As a reminder, if you go into the event app, into the polling section, you can vote for your favorite startup. The judges follow me backstage, and they're going to help us choose the finalists who are presenting tomorrow. But before they follow me, let's have one last round of applause for all our founders and for our awesome judges.